Let's check out shares in Canada Goose. TD Cowen is upgrading the stock to a buy. Look at the jump there. We're joined by Oliver Chen, Managing Director and Senior Equity Research Analyst at TD Cowen. Oliver, thanks so much for coming on the show. Part of your more bullish thesis on Goose is that it is becoming a year-round apparel seller.
Yeah, Andy, that's part of the excitement here in terms of Canada Goose becoming a retailer that sells more than just the heavyweight down lifestyle product. As the company continues to grow and go global, that's really important. As you know, many regions are not as cold as Canada, and they make fabulous parkas, but they really need to sell lighter weight jackets as well as sweaters, accessories, footwear as this company becomes bigger and more relevant. One of the genesis for this upgrade as well, Andy, is a new creative director, Hyder Ackerman. He started about a year ago in May 2024. His product is starting to hit the stores. So what we see in the stores is a lot more choice, a lot more silhouettes, a lot more colors. That's part of what's happening. In addition, this is not an expensive stock, and there's a lot of margin expansion opportunity. So as we think about the ABCs of retail, product, stores, marketing, that's working as well.
China has been an important market, or Asia generally. How are they doing in that country?
Yeah, they've been bucking the trends. China traffic has been inconsistent across the industry, but Canada Goose is growing at low double digits in China, in part because of these self-help initiatives around marketing and service. And Canada Goose is a lot smaller than competitors. It's about $1 billion market cap company. You know, many competitors are hundreds of billions of dollars in size and have a much 3 times the store base of Canada Goose. So there are things happening there in China for Canada Goose that's really bucking the trend. Also, you know, we believe in this iconic Canadian brand equity. The vertical integration is very globally appealing. You're famous for outerwear.
And just remind us, they have gone in, I'm trying to remember what other clothes, I think sweaters, but are they offering stuff specifically for summer, Oliver?
Yeah, you know, they blew out of polo shirts. So in many ways, their polos were priced too low. And they also have footwear and sunglasses and lighter weight jackets. So we're seeing early innings of more product that really can help define a whole lifestyle. And that will be something we're excited about. It's a very good designer who also designs for Tom Ford, and having the right product designer and having the right product that is year round gives them the freedom and license to also pursue the right marketing. The other thing that this company has been doing is providing better service in stores, which has been leading to higher conversion rates. Bottom line on all these initiatives is that operating margins are currently pretty low. They're around 13%. As we look across luxury and even the past of this company, operating margins should be 20% or higher. Gross margins are pretty good, and the main opportunity, Andy, is SG&A leverage in terms of margin expansion.
Mm-hmm. They're very much, about 75% of their merchandise is sold directly to the consumer.
Yeah, and that's been a journey for the company in terms of becoming more direct to the consumer, having more stores, and reducing wholesale over time. Wholesale will be important in terms of selling to great department stores and specialty retailers, but owning your direct-to-consumer channel and training and developing your own stores and managing that inventory, that's the hallmark of a true luxury company. So this has been a journey the company has been on, and it's margin accretive, and it's a good thing for the company in terms of being physical, direct to consumer, and also integrating their own digital channel with physical and stores. Stores are really important for a luxury retailer in terms of being inspirational and offering that high touch service as well.
So they have I didn't know this, so they have only about 76 stores, so a pretty small physical presence in that sense.
Yeah, Andy, as you think about other competitors such as Montclair, there's over 350 stores. So there's opportunity and runway. And outerwear is a great category, in part because, as you know, jackets are expensive, $1,000 plus. So it's a profitable, good niche. And as you think about Canada Goose, it's an iconic brand that stands for warmth and function. You interject that with new product, new design, elements of fashion, and that's what really needs to happen, and much more cultural relevance as well as we think about their marketing and the integration too.
It's interesting. What are they doing right that Lululemon is not? Now, actually, I forgot, Oliver, if you even cover Lululemon, but it seems like such a stark contrast, the two stock prices anyway.
Yeah, I would say as we think about Canada Goose, it's in much earlier innings of its footprint.
Right.
Also, this category difference is relevant too, in terms of this category being very much a different category versus athleisure and what's happening there globally. So I think self-help at Canada Goose, as well as being a smaller footprint, a different kind of category, and much bigger growth runway because of less saturation globally. The outerwear category is pretty different in terms of frequency and how many times you buy this as well. It's a somewhat considered purchase. Canada Goose is also very iconically famous for warmth and function. Mm-hmm. Those are all different characteristics in terms of what we're seeing at Goose.
Oliver, we'd better leave it there. Fascinating stuff. Thank you very much indeed.
Yeah, my pleasure. Have a great day.
Oliver Chen, Managing Director and Senior Equity Research Analyst at TD Cowen.